Good morning, this is Dave Toth with an RJO MRT Technical Webcast update on the crude oil and heating oil markets for Monday, January 10th. Starting off here with a 4-hourly chart of the crude oil market. February crude oil market, you can see that at least the intermediate term trend has been confirmed as down following last week's initial momentum failure below the 89.02 corrective low from December 31st, and then after an intra-week recovery attempt, it followed that up with new lows once again below 88.10 that confirmed this at least the intermediate term trend is down, and perhaps most importantly is defined the 90.84 corrective high from January 5th as perhaps this market's most important technical level, for that's the level the market needs to recover above to expose last week's sell-off attempt as a three-wave and thus bull market corrective sequence. In lieu of such proven strength above 90.84, we don't want to underestimate the extent to which the market might now be vulnerable. But that said, looking at a long-term weekly log scale chart, you can see that it's going to take a lot more weakness than just that we had last week to curtail the secular bull trend that was reinstated with the November 8th high above the May high at 87.15. The bullish consensus measure of sentiment is relatively tepid, neutral to tepid, so that we don't see any frothiness there. But from an MRT bullish sentiment index of large spec bullish exposure reportable to the CFTC, you can see that at a 71% reading, 345,000 longs to just 144,000 shorts. This indicator warns that this market might now be vulnerable to a larger degree corrective setback. That said, looking at a daily log scale close only chart here, you can see the pivotal level around the 87.70 corrective low close from December 16th we've discussed in the past, former resistance, new support, and we believe that is the level the market needs to fail below to confirm a bearish divergence in daily momentum that will leave this market exposed to at least a larger degree correction, quite possibly significant reversal lower. In this broader peaking and reversal threat, and again, while we have to respect at least the intermediate term trend that has been exposed as down from last week's weakness, we think it's important that this latest phase of the bull trend from the 81.04 corrective low from November 17th, it has spanned a length exactly 61.8% of the preceding rally from August 24th 71.63 low to the November 11th high at 87.81 for a 0.618 progression relationship up from that 81.04 low. That Fibonacci relationship, along with a threatening bearish divergence in daily momentum, we think if confirmed on a break below 87.70 and perhaps even Friday's close at 88.03, we think the market could be exposed to at least a much larger degree correction and quite possibly major reversal lower. And again, strength above that 90.84 corrective high from mid last week is required to mitigate that downside risk and expose that sell-off as a three-wave and thus bull market corrective sequence, and the directional scales will tilt decidedly back to the bull side. And again, certainly if the market breaks below the Friday's low at 87.25, perpetuating at least the intermediate term trend is down. I think longer term traders should also, as we've advised the shorter term traders on last week's momentum failure, longer term traders should neutralize all bullish exposure and move to a neutral sideline position, because we don't want to underestimate the extent to which this market might be vulnerable to further and possibly accelerated losses thereafter. In sum, we believe the market has defined 90.84 and 87.25 as the directional keys for this coming week. Moving to the heating oil market, we see a similar, at least short-term bearish divergence in momentum with last week's failure below the 247.41 corrective low from December 31st. That defines last week's 258.81 high as one of developing importance and the start of either a larger degree bull market corrective sequence or quite possibly a larger degree reversal lower. Looking at a weekly log scale close only chart, it's notable that the 252.60 area is the 61.8% retrace of the July 08, March 09 collapse from 415 down to 113. So we want to be leery of any kind of momentum failure on a scale sufficient to expose a larger degree reversal lower from this area. And if you move to a daily close only chart, you can see former resistance from early December at around the 248.75 area, thus far holding as new support, with Friday's corrective low at close thus far at 248.63. If the market can fail below or produce further intermediate term weakness below that level, and on an intraday basis, you can see here that last week's midweek low at 246.78 and then Friday's low at 247.10 really provides, we think, an acute intermediate term technical level, the break of which will confirm at least the intermediate term trend as down and expose further and possibly accelerated losses thereafter. Similar to that crude oil market, you can see the pretty much exact Fibonacci progression relationship. The rally from the November 17th low at 225.19 has spanned a length that is 61.8% of the length of the preceding bull move from August 24th's 195.37 low to the 244.19 high from November 10th. If the market can prove further weakness below this former resistance new support area around 248.75, we think combined with that Fibonacci progression relationship and a confirmed bearish divergence in momentum below this generally 248.50 area, we think that we'll have to respect the prospect of a larger degree correction or reversal lower. In sum, a neutral to sideline policy is advised for the time being, with weakness below last week's 246.78 low exposing a larger degree correction or reversal lower, and strength above minimally late last week's 255.86 corrective high, and preferably the 258.81 high from January 3rd required to mitigate any kind of peak and reversal threat and reinstate the broader bull trend. Please stay tuned to updates on these and other markets on our rjomrt.com website, and good luck with today's trading.